Hi, welcome to Trading Without Fear. So I just want to make this quick video about some of the challenges I've had about being an independent trader. I'm self-taught. I did sign up for both Investors Underground and Tim Sykes back in 2017, but I was only on their basic plan. I've paid for a lot of DVDs and stuff like that through Tim Sykes. I've paid for some of the ones through Investors Underground as well. But I've been pretty much solo since, about 6 months into my my trading career. Before Tim Sykes and before Investors Underground, I also went with the options trader Andy Tanner. For anyone who wants to learn options, he's a really good teacher to learn how to do options with. One of the reasons why I didn't do options with Andy Tanner was my account was way too small and I needed to find a way to actually grow an account, and that's when I came across Tim Sykes. When I was trading with Tim, I ended up buying the DVD trading tickers, and Tim Bertani mentioned of how he ended up going through Investors Underground and learning through Nate, and so I figured at the time he was one of the best penny stock traders out there. So I wanted to kind of do the same thing that he was doing, and so I kind of signed up for both. I signed up for the penny stock and silver subscription through Tim Sykes, and then I don't remember what the subscription was from Investors Underground, but during that time I had a lot of interaction with Cody, a lot of interaction with Nate, a lot of interaction with Michelle, and so after a while I ended up canceling my subscriptions from those and kind of just went solo. The reasons why I did that was understanding, not mixing mentors. So I took a lot of the stuff that they did and kind of took what they actually teach as far as some of the methodologies and some of the rules that they have, and they have very similar rules. They may actually talk about it in different ways, but their rules are pretty much the same. And so when I started going solo, I kind of realized that if I'm taking methodologies from one person and methodologies from another person and trying to merge them together, it's very conflicting information. What Tim Sykes teaches isn't always the same as what Nate teaches, the same thing with Roland Wolf, and the same thing with Tim Bertani. And so when you're actually taking all these different mentors and these different strategies, whether it's in stock trading, business, or life, they kind of conflict with each other. So what I did is I kind of stopped learning for a while from different mentors and kind of focused on what I actually knew and kind of took baby steps in that direction. So one of the first things that I had to do was, how to actually use the platform that I was trading on. My preferred broker is Thinkorswim. Through TD Ameritrade, I started off with that. When Andy Tanner was teaching options, TD Ameritrade is a good options platform. And because I was really familiar with using it already through options trading, I started kind of going, towards other things. And I know that Tim Sykes promotes and says that he likes E-Trade. I tried E-Trade. I didn't like some of the execution styles that you have to do with E-Trade, such as, having to manually type it in. There's multiple different ways to actually send an order through TD Ameritrade, and I find it very efficient and very quick. All you have to do is type in the shares, hit send, bam, your order's in the market. And I haven't really had any problems with executions. I have seen a lot of people like, Kyle, Jack, and other people also talk about how they're just not getting fills lately. They're not getting executed on their trades, whether it's for an exit or for an entry. And I haven't really had that much of an issue. So some of the challenges that I've had as a independent trader, somebody who's kind of self-taught, is I didn't have any mentors to tell me any information as far as if I misunderstood something or, kind of what to do to correct certain behavior. I had to kind of learn all that stuff on my own. Some of the advantages, and I would recommend if you could to actually join the Challenge Student, join Nate's chat room, join Nate's services, join Tim Sykes Challenge Students if you wanted to. I do think that having a mentor there to actually teach you a little bit of stuff, if you're very, very dedicated, if you want to make trading, your life, to have somebody there who will actually help you understand things when you misunderstood something, or to clarify some information, or to tell you that this isn't the right thing and this is what you're looking for. For a very long time, I actually didn't understand what a first green day was. And so I just, every time I traded what I thought was the first green day, which was just the first green bar on a daily candle after having several consecutive red days, I tend to lose money on those. So I just stopped trading them over time. When I was looking for a morning panic dip buy, because I know that's one of Tim Sykes' favorite patterns, I was trading the panics, but I didn't realize that some of the panics that I was trading was a one and done chart where they've had a history of spiking up really big on the first day and then failing on the second day. I didn't really realize some of those type of little things, and even though I was, got the DVDs from Nate and got the DVDs from Tim Sykes, some of the stuff I just didn't fully understand. And so I do think having a mentor that you're paying for the subscription, or you have somebody who's, willing to actually help you out and, not necessarily hold your hand, but kind of help you out through your trading, help you understand different things of where you kind of misinterpret things, will help exponentially have your learning curve just go a lot smoother. And so I've noticed that, in some chat rooms and, Twitter and YouTube and stuff like that, of where they kind of bash, people like Jack Kellogg. And, Jack Kellogg, in my opinion, and from what I've understood, he's actually learned from both Tim Sykes and Nate from Investors Underground. He's followed a lot of stuff through, Cody, the odd stock trader, who's also one of the people on Investors Underground. At least he was when I was there. I know in the past when I was on Investors Underground, Tim Grattani was also on their website. I don't know if he was a regular or if he was a mentor, if he was there just to help in the chat room. I don't know how that was. I didn't really see him there at all. But, a lot of people kind of, get on somebody saying, well, you didn't learn from Tim Sykes directly, or you didn't learn from this person directly. And the way I kind of look at it is, if you go out and you buy a franchise, let's say McDonald's franchise, and you try to do something on your own, and you try to turn it into your own hamburger joint, you're probably going to fail. McDonald's franchise and all franchises are set up in a very specific way for success. And for somebody like Jack Kellogg to learn from both Tim Sykes and his methodologies, and then learn from Dom and his methodologies, and then learn from Investors Underground and their methodologies, including Odd Stock Trader. To me, that's just basically going towards, in the same analogy of actually starting a franchise and following the methodology. He would have taken different type of strategies, and some of those strategies will work in certain markets. I know Cody's really good at seeing, kind of, trade before they kind of happen, kind of, estimating when when there's a hot sector of where those sectors are going to run to, what picks are going to be more likely. And he kind of buys a lot of these penny stocks and works off the probabilities quite well. And so, doing something like that, there's nothing really wrong with how he's actually following another trader's methodology, because in essence, that's what a lot of people are doing when they're watching Tim Sykes. They're basically mimicking the same way that Tim Sykes trades. Same thing with Nate. Same thing with Cody. Most traders are actually learning from somebody and picking up how they trade specifically, and that's just the process of success. And so, as an independent trader, as somebody who's self-taught, I've kind of looked at them and kind of went, I was kind of envious of some of their success, going, well, how come I didn't have that? Maybe if I had a mentor, I'd have that. And there's a couple of different reasons why I chose not to have a mentor. Some of it was due to cost. I know that, the penny stock in silver was about $150 when I was paying for it per month. And, looking back at things, that's, hardly anything compared to how much money you can potentially make in the markets. But I wasn't really dedicated to it. A lot of it had to do with, I wanted to, be what Tim Bowen calls one of those get-rich-quick bros type of a thing, of where I'd get a little bit of education and anticipate that just that little bit of education will give me, enough understanding to make a couple $100 to a couple $1,000 in the market. And then as that would come around, I'd end up investing that into education. The problem with that was, as I started making a couple of $1,000s, I wanted to take that couple of $1,000s and make more thousands of dollars with it. And so instead of actually having the discipline to actually do what I originally wanted to do, which was to join the challenge, I would end up having some mistakes and some drawdowns and multiple times blowing up my account. I can't even count how many times I've blown up my account, and I do think that a lot of it is because I didn't have somebody there to help guide me through the chart patterns, the recognition, but most importantly, the mental side of trading. And so I'd have to refund my account. When I first started trading, I was trading with like $3,000 or $4,000, grew that up to, I think the most was around $10,000. I started kind of eating my money away. And then over time, I had to fund my account with less money and less money and less money. And one of the reasons why I funded my account with less and less money was because Tim Sykes would always say, start off small. And so my fiance should be like, it's okay if you're going to trade, but don't put in thousands and thousands of dollars, because the chances of me blowing it up was pretty high. So I would start funding my account with no more than about $500 to $600, and that's still where I, fund my account with. And I would recommend anyone who actually wants to start trading, to try to, fund their account with no more than like $500 as well, maybe $1,000. There's a couple of different reasons for that. If you have no idea how to use the platform that you're using, the chances of you making mistakes just from platform error is pretty high, and you're going to actually, lose money that way. Secondly, the other reason why I recommend with less than $1,000 for, maybe for the first couple of months or first year, is because there's a lot of mental side of trading that a lot of, teachers have a really hard time voicing and actually have a really hard time conveying towards their students. And over time, I've actually starting to, pick up some of those little nuances of what they're actually talking about. And they all talk about the same thing. It's just very slight different wording. And because I do have a psychological background, I think that's one of the reasons why I was able to kind of pick it up a little bit easier. And with, studying Mark Douglas and understanding, like, I took over a whole year trying to just study Mark Douglas, and I still read all the books and still watch all of his stuff that I can, find. Anything I can find online, either on PolityWeb's website, I'll get it and watch it. And so I think a lot of that has to do with, trying to understand the market psychology. I would always go back into the cycle of, having severe drawdowns, nearly blowing up my account, or totally blowing up my account. And what would end up happening is I would go out and try to figure out what the market is doing, what the market is doing wrong. And so I spent a lot of time doing technical analysis. And I've actually learned how to do technical analysis pretty well. And, I can identify support and resistance. I can identify a trend, identify a clean chart. And so that took a long time for actually learning. And I think that's one of the things where newer traders kind of don't understand. They either want to follow picks, they want to follow alerts, but they don't actually want to understand the process. And so for me, the process was first identifying how to use your own platform, whether that's TD Ameritrade, Thinkorswim, E-Trade, whatever platform you want to start off with. You got to understand how the platform works. Not necessarily every aspect of the platform, but just basics of what you're going to be using, understanding what the orders mean, order types, and how you can use them to your advantage. The other thing is identifying how to actually read the chart properly. A lot of times, especially with newer traders, they see kind of what they want to see in the trade. They don't really see what the actual trade is telling them. And what I mean by that is based off your own emotions, based off of your desires, and based off of your expectations. And the way that Mark Douglas talks about an expectation is something that we can see, touch, feel, smell, or hear sometime in the future. And so when you're actually looking at a chart and you're seeing it, form this pattern, and for a lot of traders, they get FOMO. And so they see it kind of rip up, or they think it's ripping up. And, I've been teaching my fiance to trade a little bit, and she'll see a stock go from, 48 cents to 49 cents and say it's ripping up. And so it kind of creates, a feeling for her that it's moving really quickly when it's really not doing much of anything, and it kind of pulls back down and goes back to the same level where it's at. And so I've kind of noticed a similar type of aspects of where when I was a new trader, I kind of had the similar things of where the chart movement would cause certain emotions, whether that's fear or greed. And so you don't want to miss out on the move, so you end up buying into it really quickly. And so what that does is it actually causes you to see something that the chart's actually not telling you is there. There may not be a buy signal, there may not be a sell signal, but based off of how you feel from what the chart is telling you, that's how you respond. So that's one of the things that I've kind of learned through understanding technical analysis, is it kind of takes away the whole, I guess you could say, guesswork of what direction the market's going to move. The technical analysis works because the charts is a collective mind from all the traders that's in that stock at any given moment. And as a collective, they're going to actually tell you what direction they think or what they want the actual the price to move in their favor. And so if you're looking at an intraday chart, that can be very biased of saying it's, it looks like it's going back up, but when you're looking at the trend on, a daily chart over a 3 months or 6 month time frame, it's continuously going down. And maybe in that short time frame, it's actually going up and trying to maybe shorts recovery. Maybe people are trying to push it up. Maybe there's, a little bit more conviction of buyers going up, but overall the direction is on the downside. And so to buy into it, you don't want to have a large position or swing trade. You may want to take, what Tim Sykes calls a single and get in and get out really quickly, take 5, 10, 15%. And that's pretty much it. And so one of the reasons what kind of made me think about that is she's been learning a lot about like cryptos and buying cryptos, and Dogecoin right now is on the backside of the move. And so every time it kind of, spikes up for one green day, she thinks it's a good time to buy. And I have to kind of control her to like, hey, it's not a good time to buy. Sometimes she listens, sometimes she doesn't. It's all a learning experience. But oftentimes it'll have a spike for like one day and then start to pull back 2 days later and just keep coming down. And so technical analysis is the second part that I would recommend for traders to actually learn. There's various different ways of doing that. YouTube is kind of complicated to actually learn technical analysis on. I found that out pretty early on because I was using a lot of YouTube to actually try to figure out how to do technical analysis. That I actually learned technical analysis was from traders like Nate from Investors Underground. Brian Shannon, technical analysis book is a really good one. And when I'd actually see somebody who I know is successful in the market, let's say Cody or Nate or Michelle, I started following them on Twitter, and they'll sometimes post some of their stuff. And so what I was looking at was what they were looking at, and kind of putting that into perspective of what I was learning. And a lot of the people on YouTube, if they have a lot of indicators, their whole screen is just full of these indicators. To me, that kind of tells me that they don't know what they're doing. Most traders who are very successful, they may have a few indicators that work for them or their style of trading. Michelle uses slow stochastics and fast stochastics. And Nate and them use VWAP, and same thing with like a lot of people from Tim Sykes, but it does kind of determine what your strategy is. But if you're having MACD, volume, VWAP, slow stochastics, fast stochastics, and various other types of Bollinger Bands and all this other stuff, it's going to create analysis paralysis. And I used to have about 15 different indicators on my screen, and oftentimes I'd find that I'd get into a trade, it so happened to work, and I'd try to say, well, this indicator was the one that helped it out. This is one that was more accurate, and so I started putting more focus on that one. And then when I would get into that based off of what that one said was a buy signal, and it started not working out, I started focusing on another type of indicator because that one was working. And most indicators are lagging. They're pretty much an after type of a thing. They calculate the moves in the market over a certain time frame when they kind of put it on your screen. So they're not really there as a buy or sell signal. They're not really there as a way to actually place your trades or sells from. They're more of a guide. And the more guides you have doesn't mean that you're going to be able to, find a good trade. What it does mean is that you're going to have a lot of problems trading. And so over time, I started removing all the type of indicators. The only indicators that I have currently is volume and VWAP. That's it. As far as like the second step to do is once you can identify, how to use your platform, technical analysis, the next step that you want to do is actually identifying a consistent pattern that you can see in the market easily. The market actually has a different way to speak to different personalities, I believe. And so if one person is trying to trade a pattern or something that they can't really see clearly in the markets, it may not be for them. So what you want to do is trade a pattern that you can consistently see over and over and over and over again. And you don't have to second guess yourself going, well, is this an ABCD pattern, or is this a morning panic dip buy, or is this, or is this that? And if you kind of have any conflict of whether or not something is what it is, you probably shouldn't trade it. Once you can identify a pattern that you can see easily and identify it easily, the next step you want to do is paper trade it. Paper trading gives you an understanding of execution and whether or not the edge that you have is a valuable edge to make consistent money from, without using any sort of real money or any emotions in it. And the best part about not having emotions in it is it's purely about identifying whether or not that pattern is actually going to be consistent over a long period of time. You can actually identify a pattern and think that you're buying it, and it's actually, kind of more of a random trade, and you're randomly making profits. But by having a paper trading account and you're having a sample set of 20 to 25 trades or even a month-long trades, every single time that pattern comes up, without hesitation, you paper trade it. What it's going to tell you is over time, as long as you're tracking that information through an Excel spreadsheet or some sort of system where you can track it, it'll tell you what the probability is of that pattern. And different markets are going to have different probabilities for each pattern. Some markets, the morning panic dip buy is really, really good. Other markets like this market, the morning panic dip buy is really bad. Some markets, the ABCD pattern has a really good risk to reward. Some markets like this one, the risk to reward is okay, but it's not that great. So it kind of depends on the market that you're in. And so if you're paper trading that pattern and you're collecting the data, the next step that you want to do is actually fund your account with a small amount of money. And when you're trading, let's say if you're trading with $500, you probably want to start off with maybe $150 to $200 per trade. And when you're trading with that, you want to have a set risk of where you're going to enter and exit from. If you're the type of person like myself who has problems cutting losses really quickly or cutting losses at all, what you probably want to do is actually set up with a mechanical trading style, something that I've kind of set up myself as a mechanical trading, where I use the probabilities and the statistics of the pattern to determine where I'm going to take a profit, where I'm going to actually take a loss. And the moment I enter into a trade, my OC orders are placed, and it completely takes away the emotional side of trading. You can scale in, you can scale out. With the mechanical style of trading, it doesn't matter what the pattern is. I can get into a morning panic dip buy and know exactly where my risk is at, know exactly where my profit potentials are at, and I can also scale out of the trade if I wanted to, and it's completely all automated. So those are kind of the steps that I've learned of what traders should kind of focus on when you're trying to start up with a service, or somebody like Tim Sykes, a mentor, or somebody who's teaching you. A lot of it becomes really chaotic. You don't know where to start, so you kind of try to chase the trends where one thing is really working, you're chasing that. When another thing is working, you're chasing that. And it's really complicated, and this is one of the reasons why I initially stopped both the services, was I found that in the chat rooms, there's kind of a competitiveness amongst newer traders to try to be the best. And so when they see, some person buying these specific patterns or buying these specific stocks, they kind of chase what they believe is there when there's not really anything there. Somebody will post made $120 in XYZ stock, and you look at it and you kind of go, well, I understand why they bought that, but you may not understand what their thought process was, what the risk level was, what the risk tolerance was, how much the position size they have, how much experience they have, and whether or not for them that was actually a good trade or not. They may have been profitable, but that doesn't mean it was a good trade. When I was following people in the chat room, it kind of caused me to have FOMO, where I actually see people in the chat room making money, and I'd end up jumping into a trade without having any sort of plan, and sometimes it'd work out, sometimes it wouldn't. Especially in slower markets, I'd sit there and watch the chat room hoping for, somebody to kind of like say a stock that, is running, and I'd pull it up and, it might have had a pretty decent run in the morning, but for the past half hour, it's been just sideways action. And sometimes that's them maybe have a position, maybe they're trying to promote it, maybe they're trying to do something, influence other traders to get into it, maybe to take the other side of their position. Who knows? But ultimately it's on you. You're the one that actually just, decides to do what you're going to do in the markets. As I have actually looked into it, the challenge student last month, and a lot of the stuff that's in the challenge student I already know. A lot of the stuff that they teach I already understand. A lot of the DVDs that comes with it I already have. For myself, because it's more of the mental aspect of things, I'm kind of focusing more on doing, the mentality state. I don't believe that there are people in both Investors Underground or Tim Sykes that could really help me with my own problems as far as market and psychology goes. There's even some people that I know they work with that, they have a grasp of market psychology, but it may not resonate with myself or may not resonate with other people. And so if you are a trader and you're looking for somebody who actually teaches market psychology, find somebody who resonates with yourself. And if they are a trader themselves, that's even better. I think that people who can't trade or have never traded a stock in their life, it's kind of like theoretical science of where everything's theory, but nothing's been practical, nothing's been proven. And so they don't really know what they're talking about when it comes down to stock trading. And so, a lot of psychologists themselves, they have really good, theories about what causes human behavior, why people do what they do. And some of them are really naturally talented and able to actually understand people, while others are more, based off the book, or they actually will recommend other books or recommend other techniques or recommend other things that they heard, read, or saw from some other person. And the people who's actually recommending other people's work, and it's not something that they've experienced themselves or they've had to learn themselves or they've actually had to use themselves, in my opinion, don't really fully understand the psychology that they're trying to promote in the first place. To me, if you're actually going to be helping a person go through something, having sympathy of understanding what they're going through is fine, but having experience of what they're going through is a lot better, and having sympathy at the same time, because you can actually go, hey, I've been here, I know what you're going through, and this is how I can help you out, and this is what's worked for me, and here's also other tools that I've had to accomplish through getting to that end goal, versus just going, I understand what you're going through, that's gotta suck. Here's some other person's idea of how to get over that. Okay, that one didn't work. Here's another one of how that didn't work. Okay, let's try another one. And so that type of stuff is, when I see people who's coaches and psychology teachers and stuff like that online, and they haven't traded themselves, that's where I find an issue. Luckily, I was able to come across Mark Douglas, and he is a trader, or was a trader, and Paula T. She's also still a trader. And because they both teach and they're both trading, it's kind of like of how Tim Sykes does it, in my view, and same thing with Nate, where they're teaching something they're currently doing at the same time. So that's what gravitated me towards Paula and Mark. So some of the stuff that I'll be doing this month, I've actually had some discipline problems, and I usually fund my account with about $600. Currently, I've actually taken out all the money except for about $130 of it. And the reason why I'm doing that is, for whatever reason, every time I place an order, I will pull my stop out. In my other video, I was talking about how I believe it's because I'm really tired with our baby and all this other stuff that's going on. I'm not getting a lot of sleep. And with the current market the way it is, I actually want to be more okay with placing my orders in the market and let them sit there, versus placing an order and having to watch it. With the $130, that's going to be a test for me to not necessarily see if I can grow it, but for me to actually just be comfortable with the way that I'm trying to trade. I know from past history that the trading style that I use works. Every time I trade with that style, I make profits. Every time I trade the way that I trade, over time, I become net profitable every week, every month, and so for whatever reason, since the beginning of the month, I've had problems that every time I place a trade, either don't place the OC orders on there or remove the stops, and I just kind of let the trade get out of hand. So, starting probably next week, I'll be taking the $130 that I have, going in into a trade. I'll be trying to avoid OTC trades. I have taken $20 to $150 and turned into $500 to $1,000 before. It does take time. I have done it. So my plan is to take the $130 that I have now, focusing on listed stocks, anything from 50 cents to, $5 or somewhere within that price range, and not really going for money, but going for more of discipline as far as, did I actually use the trade that I the type of trading that I normally go for? Is it the pattern that I trade? Is the ABC a breakout pattern? And did I actually stick to my plan? Did I follow the data that I have? Did I follow the probabilities that I know? And if I didn't, then I have to redo it all over again, and all over again, and all over again, until it becomes second nature. A lot of people, like, I always, hear Tim Sykes and other traders say that they're disciplined, or, you have to maintain discipline. But one of the things that I've learned is, discipline is actually an agent of change. people, when they're trying to lose weight, oftentimes, and January 1st is a good example of that, of where they go to the gym, they start a gym membership, and they'll go, once or twice a week or 3 times a week, whatever they try to tell themselves that they're going to do, and they maintain that for a short period of time. But what ends up happening is, maybe at home, maybe where they're at work, whatever the case is, they start to convince themselves, well, I'm too tired today, or I've got other things to do, or I really can't be bothered because, work is hard, the kids are hard, whatever the case is. And they slowly over time convince themselves that they don't need to go. And then the next year, the whole cycle starts all over again. And so one of the things that Mark Douglas talks about is using exercise as an example of change of discipline, is he wanted to be a runner, and he had to kind of force himself to be a runner until the point of where it became second nature. And I know a person who, she was trying to lose a lot of weight, and she made it part of her mental environment, personality, what she is, that no matter what happened, it wouldn't be a part of her beliefs or her personality to actually not go to the gym every day or to eat that second piece of cake every day. And that's the way I view discipline. Discipline is an agent of change. It's not something that people do because that's who they are. Discipline is what you do to become somebody that you want to be. Somebody like Jack Kellogg, Mariana, Nate and Cody and all them, they'll have slips in what they perceive as discipline, but that's a slip in personality. That's a slip in perception of yourself and perception of the market, and it could be for various different reasons. And Tim Sykes is an example. He travels a lot, so maybe his lack of discipline is more of the lines of lapse of mental clarity. And it's not necessarily who he is to actually have a lapse of discipline. It's more of the mental state of mind that he's in. So, using that example, discipline is an agent of change to become somebody, to instill certain types of beliefs and instill certain type of behaviors. And over time, you won't violate those type of things. So if I start off with about $130 starting next week, and I try to focus on very specific setups and not worry about the dollars that I'm making, keep my risk pretty small, so that way if I do go on a losing streak, I'm losing maximum $10 to $15 at a time, and if I make money, it might be $10, $15, $20 at a time. The money doesn't really matter. What matters is, can I actually do it for a consecutive period of time? If I can, then that $130 will actually slowly start to grow. And like I said, I've taken $120 and turned it into $1,000 before. It does take a lot of time. In the markets that we're in now, it would probably take even longer time. But if I can do that, then instead of actually refunding my account, I'll just keep going from that $130 and see how far I can bring it. What I'm hoping for is that over time of doing that, I can learn to actually trust the way that I trade and know that it actually works really well. And secondly, I can actually instill that discipline to become part of who I am versus still having to go back to discipline again. Because what's happening is I'll actually have several weeks or even a month of complete discipline, being really, really well, and then some reason I completely go off of that. And that boom and bust cycle is where a lot of traders kind of fall into, is where they force themselves to be disciplined, and then something happens in the way that they believe things or the way they see things or their home life, and then they go back down to the bust, and they go back up to the boom where they force themselves to be disciplined. So I'm actually thinking that if I can actually just trade consistently and use that over time, I will be actually not disciplined. I'll actually be part of who I am as a trader, and I won't have to force myself to trust my methodology or trust the way that I trade. I'll already have everything set up. In the future, I'm going to be actually doing a recording of the way that I trade, as far as, setting up the OSC orders, how it actually acts, how it actually works. At this current time, I won't be scaling out of my trades because of how small of a capital I have. I'll have to go all into the trade at one time. I won't be able to separate it very easily. So when I'm trading, I'll probably only have like 2 or 3 day trades a week until it actually gets to a point where I can divide that up. I'm not under the PDT rule. I have a cash account, and I think for a lot of traders, the PDT rule kind of caused them to actually make trading errors. At least it did for me. I didn't want to lose a trade because of the PDT rule, so I'd actually hold on to a trade much longer than I should have. Instead of looking at it as an opportunity to make money on the day, I looked at it as this trade has to make. So by going onto a cash account, I actually, for a long period of time, didn't have problems counting losses. And I found that it wasn't necessarily the PDT rule that was causing me to have those drawdowns. It was something that I was thinking or feeling at the time. So starting next week, I'm taking the rest of the week off. I'm trying to get some sleep. Next week, I'm still going to not be active in the markets. If there's trade, I'll take it. If there's not, then I won't. I'm not going to be trying to force anything, especially in the markets we're in now. There are some trades that I've completely missed. That's absolutely fine. There's going to be another one sometime in the future. The normal way that I trade is the overall average of the probability of the move, because I'm also what I want to do is actually aim for a smaller portion of that probability. You know, if you're going for 40 to 50%, there's an amount of statistics that it's going to actually be on the lower side of where it's going to reach that type of numbers. And the markets that we're in now, I'm seeing that the average probability is between 10, 15, 20%, depends on the pattern. So I'll probably be aiming somewhere in between there, probably about 15%. And, you know, that's about $13, which isn't that much. But, you know, as the account grows, you know, $13 goes to 20, goes to 30, goes to 40, goes to 50. And, you know, maybe by the end of next month or the middle of next month, I'll have my account up to $200-$300 or whatever the case is. Just depends on how the market conditions are and how I can actually control my own behavior as far as the OC orders go. I don't know very many traders out there who are self-taught. I know that Tim Sykes was when he first started. But it seems like a lot of people is trying to follow mentorship programs or people and subscriptions and stuff like that, which is absolutely fine. But I decided to go the opposite direction. So it'll probably take me a little bit longer to become consistent. It'll probably take me a little bit longer to actually do the same things. But for me, in my journey of trading, I think it was well worth it. I do like to be a little bit more independent. I don't like to actually follow people. And for myself, the chat room and other stuff in both Tim Sykes and Investors Underground, for me, was a little bit more influenced the way that I decided to think and feel about certain stocks or trades. And by going independent, I had to formulate my own opinion. You know, from where I'm at now and where I was in the past, I've grown more in the past, you know, since last year when I quit my job and decided to become a full-time trader. I've had a huge learning curve. A lot of it has to do with I chose to actually do this as a career versus, you know, thinking about it, dreaming about it. And I think a lot of people, when they're, you know, half-assedly actually do it, they don't actually put all the efforts into it. And there's some people that they, you know, just like if you're going to college, you go to college, you know exactly what you want and you put all the efforts into it. And there's some people who go to college and they kind of don't really know if that's what they want to do as far as the major for their life or the rest of their life. And they kind of half-assedly do the same type of thing of where they're going into it, but they don't really give it at all. And that's kind of how it was in the beginning for me, that I wanted to do it, but I was also doing all these other things that, you know, people always say put your eggs in many baskets. And that's what I was doing. I was learning real estate investing and, you know, stock trading. I'm an author and I do all this other stuff to try to help generate revenue and do things that I like. And being an author is one of the things that I like. I don't really make very much money from it, but it's just something I enjoy doing. And so eventually when I actually wanted to go full time, I had to find a way to get passive income, something that I can actually work on very little and still generate money to kind of compensate my full-time job. At the same time, be able to focus a lot more on trading. And so that's what I did. I actually have an eBay store. I know Tim Bowen harps on that, but it is not a bad way to actually make money if you know what you're doing. And the eBay store has actually helped me a lot in trading as well. There was a lot of stuff that, you know, they always say treat trading as a business. Well, if you've never owned a business, and so that kind of translated really well for me in stocks, of where if I can make the eBay business successful, if I can make the eBay business, you know, making a specific amount of money per month, I can actually learn how to incorporate that into stock market, and it actually did really well. Gave me a lot more discipline in how I'm trading, and I had to focus really hard on the eBay business to actually make it profitable, because in the beginning I was making $100 a month, which was nothing. But just like in stocks, I wasn't really giving a lot of effort. When I had to focus more on the eBay business to get it enough to actually compensate for my full-time job, that's where I really had to learn a lot about, you know, the moments of where you know, things were costing too much, or, you know, and shipping was costing too much. And that's kind of the same way that I think about in trading is, if a product costs too much in eBay, it's like paying for too much of a stock, or, too high of a price or on the chart. And if I'm losing too much on shipping, or if I took a loss in the product because I took an offer that was too low, it's kind of the same thing on stocks of where I bought it too high and I put my risk in an area of where I thought I wanted to risk it at, and it turned out that the math or the chart, it was too big of a difference. It was a 20 or 30% loss or a 15% loss, or more than what I was actually willing to lose. And so the eBay business actually kind of helped open my eyes. As far as this goes, we'll see how the $130 challenge goes next week. Follow my progress through that. Like, comment, and subscribe to this video. I'll be posting about weekly updates of that $130 challenge, and we'll see where we can take it from there. We'll see you next time. Bye.